One big, beautiful bill. What do bookkeepers need to know? Hey, everyone. Welcome back to the channel. If you're a bookkeeper, accountant, or small business owner, you need to pay attention to what I'm about to share with you today. On July 4th, 2025, President Trump signed the One Big, Beautiful Bill Act into law, and it's bringing some major changes that are going to affect how you handle payroll, tips, overtime, and 1099 reporting. And I'm not going to lie, some of these changes are actually going to make your life easier, while others are going to require some adjustments to your processes. So grab your coffee, pull up a chair, and let's break down exactly what this means for you and your clients. First, let's talk about what this bill actually is. The One Big Beautiful Bill Act, officially known as H.R. 1, is an 870-page piece of legislation that was passed through budget reconciliation. That means it only needed a simple majority to pass. The bill passed the Senate 51-50, with Vice President JD Vance casting the tie-breaking vote, and then passed the House 218-214. So this was a close one, but it's now the law of the land. The bill does a lot of things. It makes the 2017 Trump tax cuts permanent. It includes border security funding, defense spending, and makes cuts to various programs. But today we're focusing on the parts that directly impact you as a bookkeeper. There are three major areas we need to discuss: the no tax on tips provision, the no tax on overtime provision, and the changes to the 1099 reporting thresholds. Let's dive in. All right, let's start with the big one that everyone's been talking about: no tax on tips. Now, before you get too excited, let me clarify what this actually means. This doesn't mean tips aren't taxed at all. What it means is that employees and self-employed individuals can now take a deduction for their qualified tips. Here's how it works. The deduction is available for tax years 2025 through 2028. So this is temporary, at least for now. Workers can deduct up to $25,000 in qualified tips per year. That's a pretty significant deduction. But, and this is important, the deduction starts to phase out once your modified adjusted gross income hits $150,000 for single filers or $300,000 for married couples filing jointly. Now, not all tips qualify. The tips have to be from occupations that the IRS has listed as customarily and regularly receiving tips as of December 31st, 24. The IRS published this list, and it includes about 70 different occupations: bartenders, servers, hairstylists, valets, and so on. And here's something critical for self-employed folks. If you're in what's called a specified service trade or business under Section 199A, think lawyers, accountants, consultants, you're not eligible for this deduction. Same goes for employees whose employers are in those industries. So what does that mean for you as a bookkeeper? Number one, you need to track tips separately. Employers have to report tips on Form W-2 for employees or on Form 1099 for independent contractors. And starting with the 2026 tax year, you'll need to use Box 12 on the W-2 with a new code, TP, specifically for qualified tips. You also need to report the occupation of the tip recipient. The IRS wants to know what job the person was doing when they received those tips. Now, here's some good news. For 2025, the IRS has provided transition relief. They've said that employers can use any reasonable method to estimate the amount of qualified tips for that first year. They recognize this is all brand new, and they're giving everyone some breathing room to figure it out. But make no mistake, starting in 2026, you need to have your systems dialed in. All right, moving on to the second major provision: no tax on overtime. Similar to tips, this is actually a deduction for overtime pay, and it's also temporary, running from 2025 through 2028. Here's what qualifies. This applies to overtime compensation required under the Fair Labor Standards Act. That's the federal law that says if you work more than 40 hours in a work week, you get paid time and a half. The deduction only applies to the overtime premium, that half in time and a half. So if someone normally makes 20 an hour and they get 30 an hour for overtime, the deduction applies to the extra $10, not the whole $30. The maximum deduction is $12,500 per year for single filers or $25,000 for married couples jointly filing. And just like with tips, this phases out at $150,000 for singles and $300,000 for joint filers. What do you need to do? First, you need to track qualified overtime separately from regular overtime. Not all overtime qualifies. It has to be federally mandated overtime under the FLSA. Second, you need to report it separately on Form W-2 in Box 12 using the new code TT or Form 1099 if you're dealing with independent contractors, which, let's be honest, is a bit unusual for overtime situations, but it's in the law. And here's something to watch out for. An employee can't double dip. The law specifically says that tips cannot be claimed as overtime pay. So you need to make sure you're categorizing everything correctly. Again, for 2025, the IRS says to continue using current procedures for withholding and reporting. But starting in 2026, you need to be on top of this. Okay, now let's talk about what might actually be the best news in this entire bill: the changes to 1099 reporting thresholds. For years, we've been dealing with the $600 threshold. If you paid a contractor or freelancer $600 or more in a year, you had to issue a 1099. And after the American Rescue Plan Act passed in 2021, they were planning to drop the 1099K threshold, that's for third-party payment processors like PayPal and Venmo, all the way down $600. Well, this bill reverses all of that. Let's start with Form 1099K. The threshold is going back to where it was, $20,000 in payments and more than 200 transactions in a year. Both conditions have to be met. This is effective immediately for tax year 2025. So all those people panicking about getting 1099Ks for their $600 Venmo payments, that's not happening. This is huge for gig economy workers, online sellers, and small businesses using payment apps. Now, for Forms 1099 NEC and 1099 MIS, these are for non-employee compensation and miscellaneous income. The threshold is increasing from $600 to $2,000, but this doesn't kick in until tax year 2026. So payments you make after December 31st of 2025. And here's what's really smart about this. The threshold will be adjusted for inflation every year, starting in 2027. So unlike the old $600 threshold that was set back in 1954 and never changed, this one will keep up with the times. According to the House Ways and Means Committee, this change alone will eliminate the need for more than 1/3 of all 1099 MISC paperwork. That's a huge administrative burden lifted off small businesses. One important note, though, just because you don't have to issue a 1099 doesn't mean the income isn't taxable. Your clients still need to report all their income, even if it's below the reporting threshold. All right, so now that we've covered what's changing, let's talk about what you need to do about it. Action item number 1, update your payroll systems. You need to be able to separately track tips and overtime pay. If your payroll software doesn't already have fields for this, talk to your provider about getting that set up. Action item number 2, learn the new Form W-2 codes. Box 12 is getting 3 new codes: TT for overtime, TP for tips, and by the way, there's also a TA for Trump account contributions, which is a whole other provision of this bill that we didn't cover today. Action item number 3, educate your clients. A lot of business owners are going to hear about no tax on tips and think that means they don't have to report tips at all, or that they don't owe payroll taxes on tips. That's not true. Social Security and Medicare taxes still apply. State taxes still apply. This is just a federal income tax deduction. Make sure they understand the eligibility requirements, the income phase-outs, and the fact that these provisions are only in effect through 2028 unless Congress extends them. Action item number 4, adjust your 1099 processes for 2026. You can keep using the $600 threshold through the end of 25, but starting January 1st, 2026, you only need to issue 1099 NEC and 1099 MISC if you paid someone $2,000 or more. However, and this is important, you should still collect W-9s from all your vendors and contractors regardless of the amount you're paying them. It's just good business practice, and it protects you if there's ever a question about worker classification. Action item number 5, stay on top of IRS guidance. The IRS is still releasing guidance on how to implement all of this. They've said they'll be releasing a new Schedule 1A form that employees will use to calculate their tip and overtime deductions, but that form isn't out yet. Keep an eye on irs.gov and check for updates regularly. Things are still being clarified. Let me give you a quick timeline so you know what to expect and when. For 2025, the IRS has said no changes to withholding procedures. Continue using your current processes. Use any reasonable method to estimate tips and overtime for reporting purposes. By October 2nd of 2025, the IRS was required to publish the list of occupations that qualify for the tip deduction. They've already done this. It's available on their website. For 2026 and beyond, new withholding tables will be released. New Form W-4 will include worksheets for employees to adjust their withholding for tip and overtime deductions. You'll need to use the new Box 12 codes on Form W-2, and the new $2,000 threshold kicks in for the 1099s. In 2028, the tip and overtime deductions expire unless Congress extends them. A few other things to keep in mind. State taxes are not affected by any of this. Even if someone qualifies for the federal deduction, they still owe state income tax on their tips and overtime in states that have income tax. Payroll taxes are not affected. The employer and employee portions of Social Security and Medicare taxes still apply to all tips and overtime. And record keeping is more important than ever. Your client needs to maintain detailed records of tips received, overtime hours worked, and how much of their overtime pay was the premium portion versus their regular rate. The IRS is going to want to see documentation if anyone gets audited. So where can you find more information? The IRS has a dedicated page on their website about the One Big Beautiful Bill Act provisions. Just go to irs.gov and search for One Big Beautiful Bill. They've published several fact sheets, including one specifically about tax deductions for working Americans and seniors, and another one about the list of tipped occupations. If you want to read the actual legislation, it's H.R. 1 from the 119th Congress. You can find it on congress.gov. Fair warning, though, it's 870 pages, so maybe make another pot of coffee before you dive into that one. And for ongoing updates and guidance, subscribe to IRS email updates for tax professionals. That way you'll get notified as soon as new guidance is released. All right, let's wrap this up. The One Big Beautiful Bill Act brings significant changes to how we handle tips, overtime, and 1099 reporting. Some of these changes will reduce your administrative burden, particularly the 1099 threshold increases. Others will require you to update your systems and processes. The key is to start preparing now. Don't wait until January 2026 to figure out how you're going to track qualified tips and overtime separately. Get your systems updated, educate your clients, and stay on top of new IRS guidance as it comes out. This is exactly the kind of change that separates good bookkeepers from great ones. The bookkeepers who get ahead of this, who understand the rules, and who can guide their clients through these changes, those are the ones who are going to build trust and retain clients for the long term. If you found this video helpful, please give it a thumbs up and subscribe to the channel. I'll be putting out more content on tax changes, bookkeeping best practices, and how to grow your bookkeeping practice. And if you have questions about the One Big Beautiful Bill Act, drop them in the comments below. I read every single comment, and I'll do my best to answer your questions or point you to the right resources. Thanks for watching, and I'll see you in the next video.